What is the most tax efficient amount of salary to pay yourself as the director of a limited company in the tax year 2025-2026? The answer depends on the interaction of all the taxes you might face. So that's corporation tax, income tax, dividend tax, employers and employees' national insurance. So for our first example, let's assume that the company makes a profit of £40,000, but there's no salary paid to the director. In this instance, there would be a corporation tax bill of £7,600 because they'd had to pay 19% tax on that. They'd then be paying themselves dividends on the 32,400. They could utilize their personal allowance if they didn't have any other income either earned or from things like property. Then they've got the dividend allowance of £500. So they're paying dividend tax at the rate of 8.75%, and they're paying dividend tax of £1,691. So the total tax liability is £9,291 on that £40,000 profit, which sounds like a lot. And let's see if we can improve on that. The most tax efficient salary to pay yourself is the personal allowance, because when you're paying that, you're saving 19% corporation tax, and then you're paying some employers' national insurance at 15%, but not on the first £5,000 of your salary. So here we can see that the tax bill has now gone down to £7,951. So we're a lot better off, although we've paid ourselves a salary. If we increase the salary, in this example, by £10,000, we end up paying employees' national insurance at 8%, and then we pay 20% income tax on that extra £10,000 worth of income. The tax bill has gone up to £9,251. So we're a lot worse off, and we're much better off just paying the corporation tax and then the dividend tax at 8.75%. But it is also important to then model the interaction with the rest of your finances. So this could include things like rental property income or maybe interest income that you have. So you can pull in the amounts of dividends you're getting from your limited company and from any personal investments you might have, and then model the whole lot and optimize the tax across everything that you've got. So this is a spreadsheet. I'll put a link to it in the description, but you can model both your taxes as a company director and as a private individual within the same spreadsheet. Now let's assume the profits are much more substantial at £120,000. We'll keep the salary the same at the personal allowance. So there's still employers' national insurance. Corporation tax has gone up because we're now out of the 19% band and we're into tapering on the 25% band. So we've got 24,000 of corporation tax being paid, and then we've got £18,000 worth of tax on dividends, and we're into the 33.75% band on our dividends. So we've got total tax on all of that of £43,718. So if we drop the salary down to the lower earnings limit, our tax has gone up to £44,340. So we definitely don't want to do that. So now if we increase the salary by £10,000, we're paying employees, national insurance and some income tax, then the dividend taxed at 8.75% has been eroded because we've got salary that's greater than the personal allowance. So we're paying more tax at the 33.75% band, and we're paying total dividend taxes £17,812, and the total tax bill is £44,618. So again, the optimal salary is to pay yourself the personal allowance, even on larger company profits. If all that seems like a lot of tax, then the best thing to do is to make a pension contribution from your limited company. Now, this can be done as an employer's contribution, so it's limited by either £60,000 or the profits of the company. So the fact that you're paying yourself a low salary doesn't actually matter when it's an employer's contribution that's being made. And this contribution will bypass all taxes. It bypasses corporation tax, any taxes on dividends, or national insurance. So it's a great way of saving for the future in a tax efficient manner if you have a limited company. If you're interested in the spreadsheet for calculating taxes on your limited company and your personal taxes, I'll put a link in the description, and you might also want to consider this video up next. I've done several videos that look at taxation.